Hey folks, Chris Versace here. It is Monday, May 6th. Last week, we closed the book on the month of April, and you may not have noticed, or maybe you did, but it was the first down month in the market since October. We had, two very tremendous quarters, all in all for the December quarter and the March quarter. But again, May was the first down month for the market, with all the major market barometers moving lower. However, we also started the month of May last week, and that had much better footing, a much better start of the month. We can really chalk that up to really two big events. The first was the Fed meeting where Fed Chair Powell came out and said, hey, yes, inflation has moved the wrong way. It's going to take a lot more for us to get more confident that we're on that path to 2%, but we do not see further rate hikes in the cards. And that is something that the market really liked. And then on top of that, Friday's April employment report showed the slowest level of job growth in 6 months and year-over-year wage gains that actually slowed compared to recent months. Still positive because they did manage to show the continuation of real wage growth, good for consumer spending, but when you put the innards of the April employment report together, they kind of show some inflation is starting to improve, but the pace of job creation is also slowing, meaning that the economy is not overheated, and perhaps if the economy starts to slow a little bit, the Fed might start to reconsider the timing for rate cuts. So I would say that April report was positive. As well as the comment that another rate hike is off the table was also very positive. But there was one more thing late last week that helped spark the market higher to the start of May. That was Apple's earnings. And going into that, a lot of people were concerned. Key smartphone suppliers, Skyworks, Qorvo, even Qualcomm, were all guiding their June quarter revenue below the March quarter, signaling some things are going on that may not be good in the smartphone market. Even though all of them still think, and I agree with this, that we're going to see a very positive upgrade cycle driven by AI on device in the second half of the year. That, of course, will be good for our AI models, also our data infrastructure models, but we'll be talking more about that in the days and weeks ahead. But Apple, because it accounted for, it's the second largest holding in the S&P 500 and the NASDAQ. So the market has to pay attention to it. And if Apple's, quarterly results or guidance kind of were below expectations, that was going to really impact the market. So a lot of people were nervous going into that report. But what happened? Well, Apple surprised to the upside for the March quarter. Their guidance was good, but they also had two other things. One, a arguably small increase in their dividend, but an increase nonetheless. Two, they announced the biggest stock buyback program ever. Full stop, period. The biggest buyback program ever. Now, when you dig into the report, were their iPhone sales down, 10% or so? Yes, they were. But here's the thing. It showed the power of Apple's really high margin services business and the mix shift that can happen that can still allow it to deliver, margin expansion, operating profit growth, and surprise a little bit to the upside on the bottom line. So if I had to grade Apple's March quarter, I'd say it was okay. The announcements, very positive. But here's the other thing, when you look at the short positions going into Apple's report, there were about a day and a half worth of short covering that would have to happen if Apple surprised to the upside. So I think some of that big pop that we saw on Friday in Apple shares was likely due to some short covering. We could see some of that as we start the day off today. But remember, Tuesday, nice Apple event. They're going to take the wraps off of some new iPads. There might be whispers of some of their AI plans. Potentially the new M4 chip might be in these new higher-end iPads. We'll find out much more on Tuesday. But I continue to think that the far more important event for Apple is going to be the June Worldwide Developer Conference, better known as WWDC. That's where they're going to take the wraps off not only their new software, but that's where they're going to expect to really showcase some of their AI efforts. So to me, for Apple, that is a make or break event in June. So be sure to mark your calendars for that. But let's talk about the week ahead. We did just touch on that Apple event. We also have a barrage of Fed speakers, about 10 so far announced. And what we and the market will be listening to, of course, is, well, we heard from Fed Chair Powell last week. We heard the updated policy outlook. What do they see? What do they see about the pace of the economy? What do they see about inflation? How are they contemplating the timing for rate cuts, the number of rate cuts? But also, too, when the Fed meets in June, several weeks away, they are going to share their updated dot plot. So what are they starting to think about for that? How might that factor into their thinking? So that's all of what we'll be listening to. I imagine that we'll get some, very hawkish comments. We might get some more dovish comments. So we're going to want to triangulate around them. Our thinking as of now is, yes, that April employment report was a nice move in the right direction, but it's going to take a lot more data. And I say that because when you peer into the April ISM manufacturing and April ISM services reports, the prices paid component jumped considerably in April. Highest level year to date for both of those reports. The Fed's not going to miss that. It just does, and it continues to tell us that inflation pressures, yes, they are persistent. I continue to think it's going to be higher for longer. My big question is it possible that we see rate cuts slip into the first quarter of 2025? If we see more data like we did with ISM, likely. And remember, the data inside the ISM report for prices is kind of a leading indicator for what we see in the CPI and the PPI reports. So odds are those reports in the coming weeks for the month of April won't be all that encouraging. But we'll see, and we'll continue to watch the data and course correct. The other big catalyst that we have this week outside of watching all those Fed heads is going to be earnings. And here's the thing. Most of big tech earnings are behind us. NVIDIA's earnings aren't this week. They will come later in May, so that will be something that the market will key into. But just simply put, not a lot of market-moving reports this week. For us, it's going to mean a lot of data gathering, fact-checking, thesis affirmation, kind of revisiting our models, that sort of thing, collecting data points and all sorts of nuggets. There will be earnings from Disney, Uber, Airbnb, Dropbox, Affirm, Microchip, and International Flavors and Fragrances. All quality companies and things that we'll want to listen to, as it may relate to the consumer spending, various other things. But two that I want to call out. One is going to be Dillard's. Why Dillard's? Well, it's one of the first retailers to report, so we'll be really interested in what it sees about the consumer spending, especially given recent reports about the consumers becoming even more selective and trading down. The other one that we're going to want to watch for is simply ZipRecruiter. Why? Well, we're going to want to hear what it has to say about job openings, hirings, that sort of thing, so we can kind of double back to the April employment report. Now, as far as our models go here at Thematica, there are several companies that we will be keying into and what they have to say this week. Global Foundries, ARM, Rivian, Coty, Axon, Rackspace, Synaptics, Trex, Construction Partners, and even Rocket Lab. So as we think about what they have to say, we'll be taking stock, again, collecting data points, nuggets for our models, and kind of making any updates that we have to. We'll also be looking for affirmation for our other investment themes and indices as well throughout the week as those and other companies report. And folks, that is the week ahead. Thank you for watching. And be sure to check back because we will be sharing more ripped from the headlines, thematic confirmation, and targeted exposure confirmation for our models, themes, and indices. Thanks.